If you have missed the gold rally, should you be investing in other cheaper precious metal like silver? Global uncertainty due to trade tensions and market volatility has seen investors flock to safe haven gold. Year-to-date, spot gold prices have soared by more than 20%. Alongside gold, silver prices have also been creeping higher, up more than 10% this year.
One of the concerns about weak dollar is one of the reasons why gold prices have surged since the start of the year. And as the gold price rises, it tends to pull silver price along. And if you look at it historically, gold and silver tends to move in tandem, although not one for one.
Analysts say the prices for both silver and gold are likely to continue to edge higher in the next 12 months.
We are bullish gold, and we also think that there's room for silver to play catch up to the potential rise in the gold prices that we expect. So our one-year target for gold is 3,900, and our one-year target for silver is 3,700.
Another key factor to consider when thinking about investing in silver is something called the gold-silver ratio. It tells you if silver prices relative to gold are cheap or not by comparing the amount of silver required to buy 1 ounce of gold. For example, if silver costs $30 and gold is $3,000, then the ratio is roughly 100. This is roughly where the gold-silver ratio sits today.
And given that the gold-silver ratio today, that is high relative to the 40-year average of about 70. That suggests that the price of silver is low relative to gold, and therefore that might provide some room for silver to play catch-up.
Analysts say this makes the poor man's gold attractively priced relative to gold.
We don't run into a recession if we don't get a protected slowdown of global growth, then on a medium to longer term horizon, silver looks indeed cheap compared to gold.
Unlike gold, silver also has more industrial uses, such as in electronics, as well as in the manufacturing of solar panels.
Silver is not gold. Often people think there's a close connection between the two. But from a demand perspective, we just have to say that more than 50% of silver demand is coming from industrial applications, making it much more cyclical than gold, which is dominated by investment demand from private individuals, from institutions, from central banks.
Silver's industrial demand, and the rising inflation potentially should see higher gold prices, and that in turn should benefit silver. So silver gets the double benefit of stronger industrial demand and higher gold prices in an environment of strong growth and rising inflation.
But that industrial demand also makes silver more sensitive to the ups and downs in the global economy. So even though long-term prices have risen, silver could see near-term price fluctuations. Another factor to look at is volatility. Experts say the volatility in silver prices can be 2 to 3 times greater than that of gold on a given day.
Silver is a small market. Silver is, I would say, about twice as volatile as gold. I think that's also something we need to keep in mind. It does not need much money to move the silver market. If you're on the wrong side of the silver market, things can move very fast.
Given silver's small market, it does mean that if silver needs to be sold in a hurry, you may be limited by the pool of buyers. If you can't find a bullion dealer, then pawn shops and jewelers are an option, but they may not necessarily pay well. Experts say these limitations mean that when you add precious metals to diversify your portfolio, silver should make up a smaller proportion than gold.
When it comes to adding a pure safe haven, an anchor of stability to your portfolio, so in terms of shares in a portfolio, I would argue that silver should always be smaller than gold, conceptually speaking.
If you do want to invest in silver, here are a few ways. Buy a silver exchange traded fund or ETF. A silver ETF holds a basket of underlying silver assets, such as bullion or mining shares, and trades just like shares on a stock exchange. You could also buy shares of silver mining companies, or you could buy the precious metal in its physical form, such as coins.
Each one of these coins is around $50 or so by value, and they're being sold in tubes like this, which are holding 25 coins. So you're looking at about $1,200. You're paying more of a premium for the bar. We're talking maybe 5% or something like this, but you're getting a coin which tends to be very popular for people, and during a crisis, the premium for these coins tends to go up.
You also have the option to purchase silver bars.
Here's a small bar, it's a 10-ounce silver bar. We're talking about 470 Singapore dollars at current prices. And this is a 100-ounce bar, so it's 10 times as much, and it will sell for around 4,500. Now, to give you an idea, if you're getting towards gold, gold is much more valuable on a per ounce basis, which means that the price between these two products is roughly the same. But you can see that the silver bar is 100 times bigger, more metal, compared to the gold bar.
As a safeguard, check that you're not paying GST for investment-grade silver in Singapore.
The easy way to tell is you should not be paying GST. If you're paying GST, then it's probably not investment-grade precious metals. And the reason is in 2011, the Singapore government exempted investment-grade gold and silver from GST. But it only applies to the type of gold and silver which is easily resellable and is meant for investment grade.